Today, Gemini and Genesis face SEC charges for allegedly selling unregistered securities. Yet another crypto exchange announces layoffs amid the downturn, and it was a record year for crypto crime. Kim Grauer with Chainalysis breaks down key data from a new report. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices are mixed to end the week. As of noon Eastern, Bitcoin continued its climb higher, trading above the $19,000 level. Ether, however, dipped, but traded above the $1,400 mark, and Solana inched higher, trading around $17. All three cryptocurrencies were higher for the week after new economic data showed that inflation is finally cooling down. All right, let's talk about the top stories. First, the SEC charged crypto firms Genesis and Gemini with allegedly selling unregistered securities. The charges are in connection with the high-yield product dubbed Earn. That service touted yields of up to 8% for customers. The crypto lender, owned by Barry Silbert's digital currency group, and the exchange founded by the Winklevoss twins, partnered in February of 2021 on the Gemini product. As you know, the two crypto companies have been in a battle over the fate of $900 million worth of customer funds. According to the SEC, Genesis loaned the crypto of Gemini users and sent some of the profits back to Gemini, which then deducted an agent fee and returned the rest of the profit to its users. In the complaint, the SEC said Genesis should have registered that product as a securities offering. In a tweet yesterday, Tyler Winklevoss said Gemini is, quote, working hard to recover funds, and called the SEC's action totally counterproductive. Digital Currency Group declined to comment. Next, another crypto company announces layoffs as the so-called crypto winter drags on. Last night, Crypto.com CEO Chris Marszalek took to Twitter to announce the decision to reduce its global workforce by about 20% in another round of layoffs. He blamed market conditions and recent industry events for the move. In this blog post, the CEO added that the crypto exchange's ambitious growth was unable to withstand the collapse of FTX, which he says significantly damaged trust in the industry. This follows a previous round of layoffs at the crypto exchange over the summer. And yesterday, we told you about crypto brokerage blockchain.com slashing about 28% of its workforce, adding to a long list of crypto businesses downsizing during this bear market. Last, FTX has been cleared to sell LedgerX in an effort to repay creditors. Citing a ruling from a bankruptcy judge yesterday, CoinDesk reports that FTX can now put 4 units, including the derivatives arm and stock clearing platform Embed, up for sale. The crypto exchange's European and Japanese units are also included in the process. In a bankruptcy filing, lawyers for FTX said there could be more than 1 million creditors. All right, on to our main story. Blockchain analytics firm Chainalysis dropped new data this week showing illicit use of cryptocurrencies hit a record last year, more than $20 billion. This as transactions involving companies targeted by U.S. sanctions soared. I spoke with Kim Grauer, the head of research for Chainalysis, about the data and about key trends ahead of the firm's full-year report out next month. All right, so beginning at a fairly high level here, this report says it's been a record year for illicit transactions in crypto. Can you walk us through the key points that you think people should take away from this report?
There's two big themes from this report. The first is that we've hit an all-time high in terms of the total value received by criminal wallets on the blockchain, $20.3 billion in total value received in crypto assets in this year alone. And the second big theme is how do you interpret $20.3 billion? It kind of feels like a number in a vacuum. And the method we use to contextualize that is what percentage of overall cryptocurrency activity, blockchain level economic activity, does that represent? And it turns out that is 0.24%. So that leads to the second big takeaway, which is that for the first time in 3 years, we've seen an increase in the share of overall blockchain activity that is associated with illicit wallets. Last year, we were at 0.12%. This year, we're at 0.24%.
So let's break down where some of those illicit transactions are coming from in that 0.24%. I mean, the biggest area in the past were scams, but it's not as big of a culprit this year. Can you talk about the total of transaction volume for scams and how it's changed in 2022 and why they took up a smaller portion of those transactions?
Scamming typically is the biggest source of illicit value received by crypto criminals, and we kind of predicted that would always be the case, but things changed this year. In fact, scamming is not the only category to kind of decrease in significance in terms of criminal activity. So every type of criminal activity that we track, ransomware, scams, terrorist financing, human trafficking, every single type is down except for hacking and sanctioned activity. Now, scamming in particular is down because much of crypto scamming has to do with trying to convince people to invest in fake investment ideas. And to the extent that we're in a bear market and investment in general is down, so is the share that is captured by scamming. So that's really what's driving the decline in scamming activity.
You mentioned sanctioned entities there. That was the biggest share in illicit transactions this year. What does that say about the effectiveness of sanctions that were put in place, especially when you look at things like the Tornado Cash sanction that was so controversial in 2022?
OFAC really changed the game this year with their approach to sanctioning of crypto wallets and crypto services. And what they did was, in the past, sanctioning has always kind of been a part of cryptocurrency for the past few years. We've seen ransomware, SamSam, Iranian ransomware strains were sanctioned years ago. But this year, what they did was they sanctioned services. Garantex, which is an exchange based in Russia. Tornado Cash, which is a mixer. And that did change the nature of what we're seeing, which is really reflected in these numbers. Crucially, the numbers that you see are just post-designation funds flowing to services like Garantex and Tornado Cash. But the takeaway is that the efficacy of these sanctions is kind of a mixed bag. So sometimes it's highly successful. The takedown of Hydra, sanctioning of Hydra, which is a darknet marketplace, plus the takedown of their servers, stamped out Hydra activity. But with Garantex, and other kind of services, Tornado Cash, we've seen that some of that activity has actually continued even in spite of sanctioning events.
So I want to address the biggest critique for crypto right now. And obviously, many crypto holders lost their funds with the collapse of several businesses. I think we're all thinking of FTX here, but Chainalysis makes a point in this report to say that it's not including those company transactions in this report. That's the legal system's job to determine what criminality took place. But how difficult does it make your job in tracking these transactions and dealing with illicit finance, given all of the turmoil in businesses last year? And do you expect that the number of illicit transactions, the total value, will go up if criminality is found here? Will you include that in your report?
Absolutely. So our numbers are always kind of retroactively increasing depending on new information found. And this is a big part of the crime world because sometimes it takes a while for you to learn that a transaction was criminal. It has to be investigated. And we're really paying attention to what happens with Celsius, with FTX, with Voyager, with all of these other services to see what plays out in the court of law. And absolutely, we will be adding those if Celsius is determined to be a Ponzi scheme. But it's not all the data that you find in Chainalysis reports is 100%. This is criminal. It's been investigated. There's no gray areas. And so we take that seriously. This is the lower bound estimate of how much criminal activity there is. And we're not going to kind of assume things are happening before a proper investigation has really been taken place.
So I won't ask you to reveal too much from that report, which I know comes out next month. But let's end by talking about 2023. Are there areas of illicit crypto finance that you think are most important to keep an eye on this year, or something where you think is going to be a particular area of focus if scams are no longer as popular, if sentiment around the industry is still down so much?
We're definitely looking for what happens with future sanctions. What's OFAC going to be doing this year? They leveled the game up in 2022 with their sanctioning of services. What's going to happen in 2023? We're also seeing, even though scamming is down, that doesn't mean scammers give up. They're turning to victimizing more vulnerable people. So whereas maybe in the ICO bubble, we saw crypto insiders were scammed from fake ICOs, now we see romance scams, elderly people targeted, more because people have stopped. The investment scams on the whole are down. Scammers have to adapt, and so they tend to go for more vulnerable victims. And that's another thing that we're really paying attention to and trying to raise awareness of in our scam section this year. Every type of criminal activity, even though it's down in many dimensions, what you do see is criminals have to adapt in these bear market in these times, because they still want to get money from people. So they kind of gets more sophisticated. So this is, if anything, a more important time to really be on our toes than ever before.
All right, that's all for Crypto World this week, but we'll be back again on Tuesday after the holiday weekend, so we'll see you then.